I'm Rick Edelman, the founder of DACFP. Thanks for joining us for part 3 of our 4-part series, the most important tech innovation since the internet, and our story of 2 crypto fund managers, Jake Ryan, the founder and CIO of Tradecraft Capital, and Travis Kling, the founder and CIO of Ikigai Asset Management, both based in Texas. Travis, Jake, great to be back with you in this segment.
Great to be here.
So what I want us to do right now is take a look back at 2021. This was a pretty momentous year. And what I'm wondering, we'll start with you, Jake, when we look back at 2021, what are we going to say about the year for crypto generally? What is it that people are going to talk about?
Well, I think the big trend, I think, is that, well, within crypto is that we've got a lot more adoption. I think, on the adoption curve, we've just got institutional players and high public figures now noticing and a part of Bitcoin and digital assets. I think from the crypto market standpoint, that stands out the most. From an economic standpoint, I think it's a shift, a secular shift to inflation. So.
And Travis, what do you think? What are we going to look back on and say about 2021?
Yeah, I think we kind of crossed the chasm in terms of it got to the point where holding this view that all of this was a speculative bubble and that there wasn't anything worthwhile in this asset class, that view became, I think, over the course of 2021, almost impossible to hold and still have kind of intellectual honesty. Those people are still around. They're harder and harder to find. 2018, 2019, 2020, I think that stance of none of this is worth paying attention to. There were a lot of traditional investors that were hanging on to that as much as they could. And in my opinion, Elon Musk buying $1.5 billion worth of Bitcoin on a publicly traded balance sheet for Tesla was likely the most significant event in Bitcoin history. And I think was the sort of like punctuation for if you were still trying to keep your head in the sand and not pay attention to this, that really marked this moment of like, it is impossible to not pay attention to this now.
And he's not alone. Michael Saylor at MicroStrategy has now, I think he owns $8 billion worth of Bitcoin, doing similar for his publicly traded company. Mass Mutual invested $100 million into Bitcoin in early of 2021. So you're right, there's a number of publicly traded companies that are doing this. But if that was a punctuation point for Elon Musk doing that, is there a threat or a risk that Elon changes his mind one day and tweets, "I've sold all my Bitcoin"? And if he does do that, will that punctuation point become a puncture into the balloon that makes it blow up?
Yeah, well, we saw a little bit of that, right? In one of the weirdest about faces that you could possibly imagine, Elon sort of came out and said, okay, Bitcoin mining is like not good for the environment. And this ESG crypto mining narrative that had already gotten some amount of traction through the back part of 2020, first part of 2021, but that the space as a whole had sort of sufficiently, I think sort of kept down. Well, when he came out and said, okay, Tesla is not going to accept payment in Bitcoin to buy Teslas anymore because of this ESG problem, and that combined with this kind of China crypto ban that happened right around the same time sent Bitcoin down more than 50% in the middle of this year. So you did see this example of a single actor that can have a large influence over, Bitcoin price action, basically. And I like to talk about Bitcoin's anti-fragility a lot. It's one of its strongest, most significant characteristics. And that anti-fragility doesn't mean that price can't go down a lot. That's not what anti-fragility means at all. It means that the mechanism design of the Bitcoin ecosystem as a whole is such that you can't permanently impair Bitcoin. Elon doesn't have the ability to permanently impair Bitcoin. Michael Saylor, if he sold all of his Bitcoin, the price would go down a lot, right? But over some period of time, all that Bitcoin would change hands and go back into other people's hands that at whatever price they bought it, they wanted to own it at that price. And maybe that takes 6 months, maybe that takes 12, 18 months, but that eventually you have this reshuffling of people that are now holding the Bitcoin that actually want to own this for all of the reasons that you might want to own Bitcoin. And I think that's true for Elon as well, too, where, yeah, he is this kind of figurehead. But I think he already, through this whole rigmarole, lost a meaningful amount of his influence. He still has some, but it's not something that's like a permanent hold on Bitcoin.
Well, especially since he's been equally touting Dogecoin, which undermines credibility because that is, such a joke. So I think you're right about that fact. Add on to what Travis just said.
Yeah, so I definitely agree with Travis, and it was really a layered approach, a layered thing that happened. For me, it wasn't the utopia that Bitcoin is bringing. It was that it couldn't be killed, right? From 2000, after Mt. Gox and several events, the latest in 2021 being this China ban on miners, nothing is taking Bitcoin down. It has this anti-fragility, and seeing time and time again this Terminator approach where you have this big battle against crypto and Bitcoin specifically, it being taken but then built back stronger. We saw with the China ban on miners, we saw more decentralization of the mining community after that event happening, and more decentralization being more powerful, more strong, more resilient, more anti-fragile for Bitcoin. That's really the investment. That's why that architecture is so great for something like value or like money. Couple that with things like El Salvador. I mean, talking about a first country that is bringing in the idea of Bitcoin as legal tender. That was a seminal moment. And so it's all of these layered things about Bitcoin and about digital assets that are having everybody take a look. I think that's one of the big important points of 2021. I think they said something like the adoption rate today, meaning how many US residents and citizens have wallets, is something like the amount of email accounts in 1997. And so we're just seeing that 17%, that tipping point of an adoption curve happening in 2021. That really is a seminal moment.
And let's talk more specifically about the areas within crypto that were noteworthy this past year. So I'll rattle these off and you can each give me your comments on these. We'll start with non-fungible tokens, NFTs. Travis, was that a big deal in 2021?
NFTs in 2021 were like a mini game of a much more massive game that is to come.
What do you mean by that?
I don't know if CryptoPunks and Bored Apes are going to have long-term value accrual or not. But what it did do is give a glimpse into what, in my opinion, is going to be sort of ubiquitous presence of NFTs. If you believe that society, humans in general, are going to spend more and more of their time existing digitally, less and less of their time existing in analog, in that world, the concept of NFTs are going to be so ubiquitous that you won't even refer to them that is anymore. It's like you don't call light electricity. It just sort of is. And I think that's what we got a glimpse into what is coming with NFTs in 2021.
Yeah, that I think that the key letter there is T, the tokenization, that we may discover that the artwork of that is being offered on the internet may prove to be a fad in some cases, but the notion that we can tokenize anything, both physical and virtual, is a technological innovation that is hard to overstate the significance of that. Jake, what are your views on the NFT environment?
Yeah, NFTs are a new data structure. It's this idea of having a unique digital thing. Okay, and so the first application of that idea, you know, with digital art, maybe a mania, maybe a bubble, you know, to be determined. But it's the future applications of this data structure that are really interesting. As we get more digital, we can see a world where every mortgage, every asset is tokenizable. And we have done something that is really powerful. We have distinguished the difference between possession and ownership. Okay, in the past, you know, possession, ownership required possession. Possession was 9/10 of the law, right? Still is, but this idea of breaking apart or distinguishing the difference between ownership and possession. With NFTs, we can move to a world where ownership can move in a much different way by this new data structure of NFTs. So the current application with the digital content we'll see, but I think this is going to be a much bigger story to be played in the future.
Let's remember that until March of 2021, nobody had ever heard of an NFT. It wasn't until Beeple sold a piece of art for $69 million that anybody ever became aware of it. And similarly, there was another term that a lot of folks had never really been familiar with, and that's DeFi. So talk about DeFi, Jake. How big a deal was this past year?
Yeah, so DeFi, that's a theme within digital assets. It started, roughly speaking, in March of 2020. I think we started the year of 2020 with no assets there. DeFi, or decentralized finance, is the concept of providing financial services in a peer-to-peer manner. And so financial services could be like fractionalization, it could be like derivatives, it could be exchange or markets, it could be insurance, loaning or borrowing. So any of these types of financial services now can be delivered in a peer-to-peer format. We started 2020, you know, no assets within decentralized finance. One of the key metrics that we use in that world is called TVL, or total value locked. And TVL, it's just the idea of collateralizing, putting collateral down for a smart contract. One of the very first things that happens within a capital system is the idea of a collateralized loan. And so one of the first services provided in 2020 were collateralized loans on digital assets. Reserve assets or collateral. I think we ended that year, what do we start 2021 with? Something like 20 billion, something like that, let's say. And we've seen that move up to 200 billion in 2021. And so we're seeing a big rise in how much capital we're seeing deployed and used within DeFi.
And then there was something else we'd never even heard of at the beginning of 2021, but has in the fourth quarter, something that a lot of folks began to hear of, a DAO. And the main way people heard of a DAO was the Constitution DAO. So Travis, what on earth was the Constitution DAO, and why was that noteworthy?
Yeah, so decentralized autonomous organization, again, very much just this glimpse into the future. That's what I thought when I was seeing Constitution DAO, which was a group of people that basically got together on the internet and raised money via smart contracts to try and buy a hard copy of the U.S. Constitution, one of relatively few that are in existence. Ended up not winning the auction, which ended up going to Ken Griffin, ironically. But this idea of using distributed ledger technology to organize human behavior in a new way. Again, like DAOs are probably going to end up being layer 2 for humanity. And this entirely new way of incentivizing, organizing, and achieving collective goals for one thing or another. And my guess is by the time we get to the end of this decade, DAOs are going to be well on their way to eating various different parts of like the real economy. And you may fast forward a couple decades and you may have ended up seeing DAOs sort of overtake corporations as the primary. I mean, it feels as like a primary way for businesses to form, and that sounds like very far out there, but it wouldn't surprise me over that kind of time frame.
And yet there's another set of initials, another acronym that has been around for a while, but did it get a lot of traction this past year? I'm referring to CBDCs, central bank digital currencies. Jake, was 2021 a big year for CBDCs? And if not, why not?
Well, we're starting to see more action with that. Chris Giancarlo, former chair, CFTC chair, has a book out really talking about digital dollar, the importance of US, also to be a leader in that. It's going to be very important just from an intersectional standpoint to have government digital assets. And so we have made progress in that area. We're seeing small progress there. We're seeing the IMF and other international organizations take notice of that, have meetings on it. We're seeing China probably being in the lead with more initial testing of the idea of a CBDC. They call it something different, but yes, 2021 was subtle but important, and have made a shift and movements for central bank digital currencies. And
I want to do a lightning round with the two of you as we reach the end of this special presentation in part 3 of our 4-part series. So give me your quick answers. We'll start with you, Travis, to this question. What happened in 2021 that you never would have predicted?
Oh, I got to say the Elon buy.
And Jake, what's yours? What happened that you never would have predicted?
I think El Salvador, a country this early adopting it, Bitcoin as legal tender.
And now let me give you the reversal, and we'll start with you, Jake. What did you think was going to happen but didn't happen?
I thought decentralized finance would explode higher in the second half of 2021, and it hasn't.
And Travis, what crypto event that you thought would occur did not occur?
I thought we would have gotten some more regulatory clarity out of the SEC by this point in terms of what to do with some of these kind of crypto assets outside of BTC and ETH.
So neither one of you specifically said, you kind of touched on it a little bit, Travis. We didn't see a Bitcoin ETF approved by the SEC. So that didn't surprise you?
The spot physical, we got the CME futures Bitcoin ETF, didn't get the spot physical. The fact they approved one and not the other is ridiculous, in my opinion. I assume it's probably a matter of time. They're doing investors a disservice by offering the CME Bitcoin futures, which is subject to roll costs, contango roll costs, versus just a spot Bitcoin ETF. But, it looked like they're, one of the themes around regulations in 2021 was, Washington's ineptitude, no surprise there, but it was different regulatory bodies fighting each other to see who's going to get to have purview over this thing. And they just ended up fighting themselves to the point that you didn't get all that much done, which is like classic Washington, right? But I think it's a matter of when, not if, we get a spot Bitcoin ETF approved.
So Jake, were you surprised we didn't get a Bitcoin ETF this year?
I was not surprised that they didn't do a spot ETF. And really it comes down to, I think it would have added more power to the Bitcoin theme. When they added the gold ETF in the 1990s, they were really papering over and taking away of scarcity as a real power for an asset. In the same way, I think the futures market papers over scarcity. I think if we have, and when we have a Bitcoin ETF, you're going to see the true power of scarcity and what that's like to have demand increase and supply constrained. So.
And one final question before we finish up on this particular segment of our look back to 2021. What one crypto event, Travis, would you have changed?
Oh, wow. Oh gosh. I'll say the rise of the dog coins. Shiba Inu, Doge, that mania. In some ways it brought more people to the space, but like in my opinion, kind of like for all the wrong reasons. I just wish that hadn't have happened. And when Elon was leading the charge on the Doge thing, I just found that to be disappointing. I think he was trying to make some point of this like meta point about money as a belief system, which is true, but like there's a lot of normal people that are, ended up losing money because of that. And you just wish that kind of thing wasn't, the first introduction to a lot of people for the crypto asset ecosystem.
And Jake, what event last year would you have changed?
Yeah, I think it really is the infrastructure bill and the language around broker. Stuffing that in at the end, and then us not really getting the appropriate language. I understand the idea of regulators and of government wanting to be able to get taxes and to be able to enforce and have some reporting capabilities. But what happened is they opened up language around broker and what a broker could be. And it's really putting a liability on software and miners and software developers and a lot of people that really shouldn't have this, redefining broker in such a way, putting onerous liability on entities and organizations that it shouldn't. So I think that's going to haunt us in a bad way. It's really going to do us a disservice. So I'm hoping that the interpretation of that law is better than the law itself.
That's Jake Ryan, the founder CIO of Tradecraft Capital, and Travis Kling, the founder CIO of Ikige Asset Management. And we're going to talk with the two of them in our fourth and final segment as we look forward to 2022. So be sure to join us for that very special segment. Very insightful, and look forward to seeing you there. I'm Rick Edelman. Thanks for joining us.